recent rate of inflation.
But how do we know when irrational exuberance has unduly escalated asset values?
The serious uncertainties about the economy and the housing market.
Too many Americans remain unemployed.
One of the regional Fed chairs, Neil Kashkari, made a speech very recently in which he said the big banks need to be broken up. Do they?
Well, we have been very focused since the financial crisis, and the Dodd-Frank Act has directed us to pay attention and try to put in place policies that will deal with too big to fail. So I certainly share President Kashkari's concern with too big to fail. I feel more positive on the progress that we've made. First of all, we've put in place policies through supervision and regulation that has greatly enhanced the safety and soundness of the banking system. And so we have more capital, higher quality capital, more liquidity. We do rigorous stress tests in our supervision. So I think the odds of failure of large financial institutions is lower. But we're also dealing with the issue of how would we resolve such an institution if one were to fail? And I think that we've also made considerable progress there as well. We're working internationally with other countries. We've identified strategies that could be successful in resolving a company. We've asked the firms to produce living wills that address a number of areas that could be problematic in a resolution, for example, under the bankruptcy code or under Title II. And I think the firms are working hard on the living wills and simplifying their structure and identifying resolution strategies. And we've recently passed a rule that will require them to hold, in addition to a substantial amount of capital, enough long-term debt that if a company were to encounter distress, there would be essentially resources that could be bailed in a resolution to recapitalize that company. So I think we've made considerable progress, and so I certainly haven't arrived at the conclusion that my colleague has. I'm pleased with where things are going.
Lawrence Summers, who some thought was one of the contenders for the job you hold, says that there is no question that Bernie Sanders is right on one central point, which is the financial industry has too much influence over the structure and governance of the Federal Reserve. Do you think that's true?
I don't think it's true. I think we are charged by Congress with regulating financial institutions, and we take that mission seriously and are tough supervisors and regulators. We talk to bankers, of course, on a regular basis. We're actually required, and we have bodies like the Federal Advisory Council that Jamie Gorman has served on, where we meet regularly to exchange views and understand the perspectives of bankers, but we're very focused on regulating and supervising the banking system in a way that will achieve Congress's goals.